What's going on, everybody? Welcome into the Monday, February 10th, 2025 edition of the Daily Energy News Beat. Stand up. Here are today's top headlines. First up, Swiss voters reject emissions curb over economic concerns. Next up, $300 billion in global nuclear energy investment. Is this in trouble because of DeepSeek? I've got some thoughts on this one. Next up, pushback begins against Trump's oil agenda. We'll stick there in the United States. Trump says he has spoken to Putin about Ukraine. We'll make sure to say what that means for the overall energy markets. And finally, why Keith Kellogg's plan is dead on arrival, avoiding the catastrophic downside risk of Russia nuclear negotiations. Stu will then kick it over to me. I will quickly cover what's going on in the oil and gas markets. We did see rig count have a surprising little jump. Prices finished, down for the week, slightly up on the day. And then we did see over the weekend on the 7th, Bayswater and Prairie Operating announced a transaction with Bayswater selling some DJ assets. So we will cover all that and a bag of chips, guys. As always, I am Michael Tanner, joined by Stuart Turley. Man, it feels good to be back. Great week at Nate, but I'm back home. I'll tell you that much.
Oh, we got a lot of work. We put out a bunch of podcasts, Michael. Great job to you and the team and RT. It was a lot of fun.
You were the one holding the fort down from the podcast, so we will get all that pumped out, and you'll be seeing content rolling out from us all over next week. We appreciate all of our sponsors, W Energy, Reese Energy Consulting, for making what we did at Nate possible. So real big shout out to them. But without further ado, let's kick it off. Stu, where do you want to begin?
Hey, let's start with a trend, Michael. Swiss voters reject emission curb over economic concerns. The Swiss voters rejected a rigid emissions limit, dismissing a call for more climate protection over fears it would stymie the economy. Look at this. This was only about 30%. I mean, this is, while this is Switzerland, which is not a huge economy, it's a bellwether, if you would, for people are tired of climate activism in shutting down economies.
Yeah, it's really difficult when the climate policies are really a way to just shut down energy use. Yep. Everybody wants a clean economy, but everyone's also aware that we need to constantly be growing our energy availability. And the problem is, I think a lot of these policies, specifically what they're trying to do in Switzerland, or this proposal in Switzerland, was trying to put the two at odds with each other.
Oh, yeah. And so I think we're going to see some of that with Lee Zeldin, with President Trump saying for every one new regulation, Lee, you must eliminate 10.
Yeah. So what exactly did this plan demand? Well, that greenhouse gases that was emitted through consumption, which is a vague term anyway, be reduced to 10% of their 2018 levels within the next 10 years, which is pretty interesting. And again, a lot of this was submitted by the younger crew over there in Switzerland, which is interesting. And was something that's fascinating, and that this article points out, Stu, about Switzerland, was that they have a system of what's called "quote unquote" direct democracy, in which citizens as often as 4 times a year vote on different policy issues, which gives the more junior politicians in their parliamentary system a lot more influence than they may have elsewhere. Even though a lot of these proposals are kicked out at the ballot box, it is a very interesting quote. One quote here before we move on, Stu, from what's this guy's name? Leg. I forget what his full name is, but I apologize. He said it's common in Switzerland that different political camps launch vote campaigns for extreme demands, because even if they fail in a vote, this is a way you get a topic on the agenda. So again, it's interesting, but this definitely got shot down quick.
Yep. And I think we're going to see more of that around the world. Let's go to the next one here. I'll be curious to hear what you want on this one. That is 300 billion in global nuclear energy investment. Is this in trouble because of DeepSeek? This is from Ananias, and I really liked it, even though this was almost an advertisement for investing in uranium. I thought it was a good article when you take a look at the vast energy potential and clean energy of generating power through nuclear reactors has caused a surge in global demand, with every region increasing nuclear investments at least 50% over the next 5 years. Look at this. Europe, 132 billion. A lot of that Europe money is maintenance on the old France numbers. Asia, 106. North America, 35 billion, Eurasia 17 billion, Middle East 12 billion, Central and South America 8 billion, and Africa 2 billion. So I think that it's DeepSeek is not going to impact this at all from a standpoint of people still need to go to nuclear. I think that we will see more natural gas like you would never believe before, because of we're still going to need data centers. So
Yeah.
I don't think we need all the above. We need more energy.
Well, here's where I disagree with the premise of this article, because I don't think that DeepSeek is going to cancel all of this energy stuff, because I think as we've gotten farther and farther away from DeepSeek's announcement and people have dove more into it, I mean, there's a big difference between training and inference. And by training, I mean setting up a model and basically being able to like train the model so that it says accurate information. But then there's inference. And inference is simply, Stu, you make a request to ChatGPT. You type in on Grok, tell me about why Elon Musk is the greatest person of all time, and then it spits out the answer. That's inference. Inference is only going to skyrocket in the amount of use that all these data centers are going to need, and it's where the majority of the compute power goes. Yes, training is big, but inference is huge. So go back to what Elon Musk did with his mega cluster in Memphis. The reason why 200,000 GPUs is such a crazy number, that's not the most amount of GPUs that are available. I mean, there are larger clusters in think about Virginia, think about what Amazon has. There are larger data centers, but those data centers are fragmented into doing multiple different things. Whereas that 200,000 GPU cluster, that mega cluster as they're calling it, is specifically for training, meaning you could maybe generate a powerful model. What DeepSeek did is just trained a model for an extremely low price. Now, what's happened? Everyone who tried to log on to DeepSeek 2, 3, 4 days later couldn't, because they had to limit access to it, not because they wanted to limit access to it, but because they didn't have the capacity to serve that model to the end user, aka inference. So I think what DeepSeek really showed is that you can train models a lot cheaper, but it also exposed the fact that you need massive amounts of compute in order to do all of the inference and actually make products that people will be able to use. So I do not think any of this will be canceled. I think even post DeepSeek, you've been seeing people come out and say, we still are going to spend this much money on spinning up data centers. We're going to still be spending this much money on compute. If DeepSeek had really come out and really changed the inference game, then I would agree, but I really don't think so. So yes, I do think there was some interesting stuff that DeepSeek did, but no, I slightly disagree with the premise of this article.
Oh, I agree. All right. Hey, let's go to the next story here. Pushback begins against Trump's oil agenda. Michael, I believe that I think Drill Baby Drill is a great campaign speech, but the industry is not ready for just unleashing before. Let me give you this one quote out of here from Ron Gesick from Liberty Energy. I love him. He is absolutely a cool cat. It's all about the price. Of course, it's always about the price. This goes for OPEC and the U.S. shale drillers alike. What you're seeing is a huge amount of positivity. The president of Liberty Energy told the New York Times late January, commenting on Trump's entry into office. But it's too early to say that it's going to translate into change into actual activity levels here in North America, Ron Gesick told the New York Times. I agree with Ron. This article came out of Oil Price from Irina Slav. I think the discipline is there, and it's not drill baby drill anymore. It's drill baby drill when fiscally responsible. I think that the only way that President Trump is really going to have a huge impact on increasing oil production is if he can lower the costs. And that lowering the cost is going to be through supply chain savings as well as reduction in regulatory demands on EMP operators. R.T. Trevino, a great EMP operator, said, yes, get rid of the regulatory issues and we could save a lot of money. So you can get by with less than $70 a barrel and make more money. You'll see more drilling. Make sense?
Yeah. We were having a conversation with Ann Bradbury, who's the CEO and president of American Exploration Petroleum Council, and she stole this quote from the former CEO of Liberty, now Secretary of Energy Chris Wright, where he said in his confirmation hearing that drill baby drill is really build baby build. And that's where I think that sentiment is going towards, is
I
infrastructure to hold that. Do I think Trump is going to be able to lower oil prices? It's possible. I don't think you're going to see much lower than $65, $60 a barrel, if only because that's equivalent to $45 a barrel, 4 or 5 years ago when Trump was back in office, because of the amount of inflation that we've seen. I tell everybody who will listen to this, listen to me on this, that, specifically in the United States, people have went through the wave of grow production at all costs, and, they learned the lesson. Maybe they were too late to the party to learn the lesson, but everybody learned the lesson. We've seen bankruptcies through the roof over the last, kind of that end of the 2010s. So what does that mean for right now? Well, people, you talk to E&P companies, they're not drilling not because of regulations. They're not drilling because of a focus on profitability and a focus that we need to make sure that the wells we drill actually give us a payout and give our downstream partners a payout, and not just worry about where that stock price is relative to where production growth. So I do think Trump is going to have a really, really hard time lowering prices. As you recall, when last time prices were $45 a barrel, it was because Saudi Arabia declared war on the United States shale business. Well, they can't afford, their economy is based on profits from oil and gas. They can't afford $45 oil over in Saudi Arabia. They maybe 10 years ago they were able to do that because of where they were situated from a sovereign income standpoint, but now they can't. All of these investments that they're making to try to diversify away from oil requires them to need a high profit margin on their oil. So I disagree that we're going to see super low oil, $40, $45 a barrel. I don't think that's going to happen. And specifically, Trump's re-engaged the sanctions on Iran. There's 2 million barrels a day. Depending on what happens in the Russia-Ukraine area, obviously Trump wants to end that, and you might see more exports out of Russia. But I think the market is also realizing that Russia is just exporting oil anyway. It's just going to places it may not normally have went, or you've got countries like China and India buying so much and just storing it. So maybe even when the sanctions come away, they actually stop buying that much. So I think there's some very interesting stuff going on. I don't think we're going to see a huge price in oil. And if I had to put my number on it, I would say the floor is, somewhere in that $60 to $62 range.
Wow. Cool. All right, let's roll to the next one here. The next two stories are pretty much into the same topic, and that is Ukraine and President Trump ending the war. President Trump says he's spoken to Putin about Ukraine, and he's basically saying that he's talked to him. When asked how many times he's been in contact with Putin, he noted, "I'd rather not say." The U.S. president told a paper he believed his counterpart wanted a cessation of hostilities. He wants to see people stop dying, Trump said. All those dead people, young, beautiful people, they're like your kids, 2 million of them, and for no reason. So I think President Putin and President Trump want to end the war, and I couldn't be more happy about this. But President Trump has got Keith Kellogg, General Kellogg, who is a cool cat. They do not truly understand, because the Biden administration ripped out a bunch of material that they needed to know. And that is basically, if Putin does nothing, if Putin does nothing, he keeps the Crimea bridge, the land bridge. So he's now got the sub bases, he's got the extra ports. He is moving all of his natural gas pipelines and all of his oil to India and China. He is pumping everything he can. Michael, their GDP in Russia increased to 4% growth in GDP last year. A lot of countries would like to have a 4% growth in GDP. He is now at about 39% of his exports are his GDP and energy exports. Sanctions have not hurt him. So the bottom line is President Trump needs to look at other ways of negotiating because President Trump is not negotiating from a position of strength. Make sense?
No, it does make sense. Yeah, I again to kind of to put my quote unquote wisdom on all this, from an energy fallout standpoint, I don't think the ending of the war or the increase of the wars is going to do anything to oil price. I think people have figured out where prices are. People understand that exports are still happening. So if Trump is hoping that an end of the war is going to lower prices, I do think he'll be sadly mistaken.
No, and OPEC and OPEC Plus really do not have a good control on what people are buying or producing.
No.
They've done a pretty good job in the past, but they've lost control, in my opinion.
Yeah, absolutely. Well, all right. Well, let's jump over to finance, guys. Before we do that, as always, let's go ahead and pay the bills. Thank you for checking us out here on the world's greatest website, energynewsbeat.com, the best place for all your energy and oil and gas news. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. You should also hit that description below. All links to the timestamps, links to the articles are there. The best way to support the show is subscribing to us on Substack, theenergynewsbeat.substack.com. If you are so inclined, go ahead and sign up for a paid subscription. You get some very interesting content that you can't see even on the free one, and you get a direct line of contact between myself and Stu for any questions you might need answered. Again, that's energynewsbeat.substack.com. We'd also like to shout out sponsor of the show, Reese Energy Consulting. Guys, you're leaving money on the table, not calling Reese Energy Consulting if you're an E&P operator who is not having you do not have a marketing department. And I don't mean social media. I mean oil and gas marketing, making sure that the contracts and your first purchasers and your gas contracts are as profitable for you as possible. I promise you, if you're not working with a marketing team, you are leaving money on the table, and the folks at Reese Consulting are their best at that. They also are geared up to help you soup to nuts on any LNG project, whether it's a small, just getting your permits off the ground, all the way through the construction phase. Highly, highly recommend. Go to reeseenergyconsulting.com. We love them over there. And finally, guys, if you want to become Billy Bob Thornton from Landman, we have all the info that you need to get off the ground to begin your oil and gas investing journey. Check out investinoil.energynewsbeat.com. Sign up. Tell us a little bit about yourself, and we will get you all of the information on what investing in oil and gas looks like. Get you a great ebook, especially if it's your first time investing in energy. We give you kind of a little breakdown of all of the different types, and then we will point you in the direction of where we're making all of our investments as Energy Newsbeat. It's a great, great resource. Again, if you are interested in getting a little bit of tax savings, getting some monthly distributions, and finally being Billy Bob Thornton from Landman, guys. So that's the key there. Investinoil.energynewsbeat.com. Markets, Stu, overall on Friday, fairly muted. S&P was down about 0.9 percentage point. NASDAQ down about 1.3 percentage points. 2 and 10-year yields were up, though. 2-year yields up 1.8. 10-year yields 1.2 percentage points. Dollar index up about 0.3 percentage point. Bitcoin still at $96,000. It's basically flat over the weekend. Crude oil finished the week at $71 even, up about 0.5 percentage point. Brent oil fell about 0.2 percentage point, 74.71. Natural gas was down to $3.30, or shaved off about 3 percentage points, and about a 10 cents on that index. Our XOP E&P securities contract was down about 0.5 percentage point, down to 133.25. This was the third week over week drop for oil prices. Mainly things held steady from new sanctions that have been, and more tougher sanctions that were imposed on most of Iran's crude oil exports. But any potential trade war with China and tariffs on countries that we import energy from is going to, is going to hurt from a pricing standpoint. I think, this is a quote from John Kilclough. He's over there at, again, Capital Partners. We're just trying to make our way through the sanctions, non-sanctions tariff talk from the White House. He says, I don't know if prices are low enough for the president, but we will see. That $70 a barrel has been that lower band of the trading range. So, while Trump may want to see it lower, it's going to be, I think he's going to, and I would personally find it difficult for that price to be able to get much lower than that. We also did see rig counts drop on Friday. We did see an increase in 4 rigs in the United States, up to 586, still down about 37 rigs from where we were a year ago, but nice to see a couple more rigs coming on. The other thing that we saw us do on Friday was a nice little DJ Basin up there in Colorado. Nothing like a transaction happening there. Bayswater, which is a Denver-based oil and gas development company, entered into an agreement to sell DJ or Denver Julesburg Basin, for those of you not familiar with it up there, to Prairie Operating Company, which is actually a public company. So Bayswater being private, Prairie Operating being public. It's a combination stack, a cash and stock transaction, which would be valued about $603 million. Quote here from Steve Struna. He's the president and CEO of Bayswater. Today's agreement represents the culmination of years of work by our talented and dedicated DJ Basin team. Bayswater has been operating in the DJ since 2008. We are proud of the high-quality asset we have built. Our reputation as a responsible operator and positive impact we have in the surrounding Weld County communities. To give you guys an idea, the sale included about 24,000 leased acres, 300 producing horizontal wells on over 30 pads, 2,500 barrels of oil equivalent per day. It also includes 9 drilled but uncompleted wells and a operated horizontal or an operated saltwater disposal system. To give you guys an idea, Bayswater is a privately capitalized company which raises money from endowments and other what I would call not high net worth individuals. They're a little bit bigger than that, but other what I would call semi-institutional capital. It's not necessarily private equity backed. They have more of kind of an endowment, kind of family office style model. They do the fund model. So all of these assets were specifically in a specific fund. People ask, well, why only sell a portion? Because remember, this is only a portion of their Colorado asset. They still have about 70 horizontal wells and about 18,000 BOE from those wells. And so the question is, why not sell everything? Well, when you look at the fund model, there's a life cycle to every fund. And if you're a 5 to 10, if you're a 5-year life cycle or a 10-year life cycle, as you get closer to those dates, you have to begin to think about a divestiture to monetize those assets to, close out the fund and return whatever remaining capital back to your partners. And that's what's going on here. This 24,000 acres and 25,000 BOE per day was part of a fund that was closing in on their lifestyle. This other remaining acreage or 18,000 BOE is in a different fund. So, quick note there. That's the press release from the Bayswater side. Going to look at, from the Prairie Operating side, the convenient part is they're public. So we do get a little bit more info from them. So the total purchase price was $602.75 million. It's going to consist of cash and up to 5.2 million shares of common stock. So we don't quite know the split yet until it closes, but we can do a rough calculation based upon the share price of Prairie Operating in cash. Looks to be about a 50-50 split. They obviously throw the up to in the press release to kind of give them some leeway depending on what it happens. It's 69% liquid, so that 28,000 BOE per day is about 69% oil. It's about basically 54,000 net acres, which includes about an extra 600 highly economic drilling locations, which they claim add about 10 years of inventory. They also, in response to that, they were able to increase and expand its borrowing base to $475 million at the close of this. So, it's for them, it's great. Basically, at a PV20, the PDP was valued at about 23,000 per flowing BOE. I love seeing that number only because that gives us a great window into what things are selling for. And then we can also kind of do the breakdown from a drilling location standpoint. But, overall, Colorado actually does remain to be a fairly high margin, high cash flow asset for multiple, mainly because of the oil weighted nature of the DJ. You just get a lot more oil than you do gas, which is great. Now, operating in Colorado has become tougher, but I do think as we've seen, I wouldn't consider this a consolidation move, mainly because Bayswater is still operating in Colorado. Again, they're just closing out one of their funds, but there's value that remains to be seen. And I think there's a few, there's only really one or two larger pieces. I mean, really, you think about, who's left in Colorado. You've got Civitas, and the other one that is still out there is Oxy, and mainly because of their ability and the amount of acreage that they have down in Texas, specifically with obviously the acquisition of Anadarko, but then more recently their acquisition of Crown Quest and Crown Rock. It remains to be seen what they decide to do with Colorado. I'm not saying I know anything specific, but I do have a feeling that there's going to be some sniffs, and I wouldn't be shocked to see that if in 2025 Oxy decides to exit the DJ. The question is who's willing to scoop all that up at the price that makes sense. Obviously, no new operator is going to move in and buy it. So is it all one transaction? Do they piece it out to companies like Prairie, do Civitas, or there other companies that come in? I think that and my prediction for 2025 is Oxy is going to do something with that Colorado asset, not only just to get it off the books, but monetize it and continue to pay down that debt and mainly focus on some of their core assets, specifically in Texas. So nice to always see a M&A action, guys. I'm speaking of that, and we do have a new deal spotlight that's going to launch this week. First time we've done a private fund that you guys, as accredited investors, can invest in. A good friend of mine, Eric Rice, former colleague, and you could call him a boss of mine, but he was on a different team. But it's an awesome, very interesting investment opportunity that I, knowing not much about the crypto and Bitcoin space, was great to learn at. And the thread between how energy and Bitcoin play off each other is awesome. So I'd highly recommend go checking out. It'll probably be a Thursday, Friday release, but very much looking forward to that. Stu, what did I miss? What should people be worried about?
Well, I'll tell you what, let's keep an eye on Doge. You can't buy that kind of entertainment like we had on the podcast last week. Turns out that Doge was actually created by an Obama legal entity. So the reason Trump is rolling around all through all of the agencies and we're finding out about how bad things are, it was started by Obama with all these backdoors. You got to love it.
No, you do got to love it. And it's super interesting. And we know you'll be keeping us up to speed, guys. But with that, we're going to let you get out of here, get back to work, start your day. First off, Stu, we're recording this before the Super Bowl. So as you guys listen to this, the Super Bowl will be done. Who's your vote on who's winning?
It'll be 42-38.
Who's winning?
The Chiefs. And the refs.
Okay, the Chiefs and the refs are winning. I have a feeling the Chiefs will win. My heart is obviously with the Eagles, longtime Broncos fan here, so it's going to just pain me if the Chiefs win again. I have a feeling they will win, but my heart is with the Eagles, and I hope they end up pulling it out, guys. But we will let you get out of here. For Stuart Turley, I'm Michael Tanner. Thanks for checking us out to start your week. We'll see you tomorrow.